Good afternoon, everybody. Howard Greenberg here with Prosper Trading Academy and the legendary Charlie Moon, the disciple of trend. How you doing today, Charlie?
Doing great, brother. Doing great. How about you, man?
I'm good, man. I can't complain, hoping everything goes well for those folks in Florida. But here in D.C., we've got some nice weather today. And, markets have treated me pretty well this week so far.
Attaboy.
I got a question for you. What do you make of everything going on with the Apple, news with their reduction in demand for the iPhone? I know, of course, I, like always, was well ahead of the market and got the 13 the day before they announced the 14. I am absolutely the trendsetter there. But what do you think about that and how it affects the chip makers also?
It's funny you say that because if you've been in a loyalist, I'm pretty sure we've all at some point in time did something like that. I have as well. So it was a bit of a surprise because there's been a lot of chatter about the iPhone Pro and the iPhone Pro Max being in big demand, and maybe that's the offset, right? And, that's the thing. It's like people don't realize the offset here. Does Apple really want people to buy their phone at $900 to $1,000 or at $1,800 to $1,900? And the demand is clearly coming in for the Pro. It's a superior phone. It's a great phone. I'm a huge fan. I'm actually considering upgrading.
That. What did I tell
you? Morgan Stanley came out with the same. Morgan Stanley came out with the same note and said the same thing, that in essence that it's actually the demand for the higher phone. And I believe Gunlotch, but I don't want to be quoted, but someone else came out and said this is actually very typical where Apple overshoots on production to suppliers and then they reduce later on in the year during these cycles. So I'm not worried. There's a large group, I think the largest group that is historically due to upgrade to the newer phone. I think the demand is going to be great. Everybody that I know that have already gotten their Pros have said it's amazing. Everything that I've seen from the Pro is amazing. Maybe iPhone sales come in a bit softer, but I bet you their sales revenue is still going to be pretty damn strong. And for me, when we talk about Apple, the iPhone is the engine of the vehicle, but what makes it go faster in terms of growth is going to be the wearables and subscriptions. I think that the numbers for subscriptions is going to be a very good surprise. I'd actually be shocked if it came in lower, but I'm not an analyst. And more than anything, this iPhone iWatch is being offered at a price point they've never seen for the iWatch. And if demand actually comes into play for that, well, that's going to also help boost sales revenue and probably surprise the market as well. So I think it's a bit overblown. Would I short Apple? Yes. Would I buy Apple? Yes. Depends on the timing. Remember, I'm a chartist. I'm a trader. I'm not married to anything. In the sense of today, we were looking for a rebound play and we got it. Apple didn't finish positive, but it sure finished way off of their lows, brother. And that tells me the demand and response in that name and how that kind of news was a bit overblown, right?
Yeah, I think Apple's always one of those ones that whenever there's bad news, I'm ready to buy that dip. Because, it's just, nothing hurts the machine that is Apple. You know what I mean? In all honesty, like you say, don't fade, the Musk. It's similar to me with Apple, man. You can't, on a short-term trade, absolutely. But in general, I just see it bounces back, man, with a vengeance. And it's like you pissed it off. It takes off from there. So,
the big war machine, so to speak,
Yeah. So you hit on the next part that I wanted to bring up. I mean, just general market today, good day overall. From the crypto side, when I was looking at equities, they were looking pretty good too. Especially rallied midday, a little different than what we've seen. We actually sustained it to the end of the day. What do you think? I mean, tomorrow morning, 8:30 a.m., this will come out after that. So we'll know by the time this comes out what the results are. But we have GDP reporting tomorrow at 8:30, pretty big number, probably the biggest this week. Got some sentiment numbers on Friday that are big, but this is the big deal, right? We all been waiting.
Yeah, PCE numbers as well, which is tied to inflation. But you're right, the GDP report. So a few fixtures today about the rally. It made a lot of sense that the rally was going to come into play. Perfect time for shorts to cover, right? Also, a fun fact, historical data had said when the S&P 500 sells off for 6 days in a row, there's a high probability that we're going to bounce on day 7. I believe under normal conditions, it's somewhere in the tune around 76%. But the added caveat was that when those 6 days of losses or sells leads to a new 52-week low, which has happened only 20 times prior to yesterday, which was Tuesday, history says it's an extreme probability that we bounce to the tune of 90%. It's only happened 20 times prior to yesterday, which was Tuesday. And in that sense, we could kind of smell it. And, it's something that I really caution my room and to be prepared for that. It wouldn't surprise me to see some covering some liquidation ahead of the GDP numbers because the market really doesn't know how it's going to react. There's two sides of the story here. It's teed up for a beat. Expectations are at negative 0.6%. And that's exactly how it reported last time. So as long as we're not, I guess, underneath or lower than that number coming in at 0.6 or 0.7, or even, worse than that, God willing, that hopefully it's not going to be the case. Certainly there's a possibility that the market will respond, right? We're like, oh, well, it's not as bad as the last GDP report. We're seeing our economy starting to recover. But in the same sense, it also means that's our 4th negative GDP in a row, right? And the White House has been adamant about, well, 2 negative GDPs doesn't necessarily signal a recession. And we said this in our podcast last time. Well, what does 3 mean? And then now the question even becomes louder. Well, what the hell does 4 negative GDP reports mean? And it just comes to that point where we can't just ignore the thought of a year-long negative GDP and what that does and what that means in terms of historically what it means relative to our economy and expectations. So it could lead to some fear and which could lead to capitulation. I don't, everybody talks and throws out that word. I believe it's thrown out way too often. I've seen capitulation in this market. We haven't seen it yet. And that's the scary part. We haven't seen it yet. We've seen this weakness in the market. We've seen the selling. And I truly believe we haven't seen capitulation yet. So it's to that point where when what hits the fan, and it really starts stinking up the room, how many people are going to start running out that room? And that's my cause of concern here. So I do want to see the markets bounce. I do want us to see this hold this level. That 200 EMA, we reached it just barely, but we're still holding above that level, Howard. And that's going to be really key. For those that don't know what I'm talking about, it's the 200 SMA on the weekly chart for the Qs. We haven't been under that level since 2010. So that should kind of tell you how important that level is in the near term and for near term traders. I don't know, man. I really feel like that we're going to see if this market gets ugly or maybe stagnant or even a bit cautious, that we're going to see some money flowing into crypto. I mean, do you agree with me? It's almost like that's the flight to safety.
I'm trying to digest everything you just said because now I'm ready to go cry in a corner.
No, don't cry yet.
But because of what the correlation has been, and if you're really thinking that there's that type of downside. And I will say yesterday, I was on money.net and not Steve, but one of the other guys he had on,
Reed?
Oliver. Oh. No, Oliver, the guy from Dragon Trading, was sort of similarly to you, saying, because so I don't want to put numbers into your head, but what is that percentage down that you see? So with 275 on Q, 271 is the 200, or when I looked was 200 SMA or so. What are you looking for more downside from there?
Are you
thinking 250 or are you going 230?
If we're gonna relate this to the Qs, I'll show my chart here.
Yeah, if you don't mind, if
we're gonna relate this to the Qs, I'm gonna be very honest with you. I'll show you exactly where I think we're gonna end up. So we break this level, and you can see how we're holding it. 200 is the designated range, my man, and possibly down by where that COVID lows were. I fully believe that. I actually been telling the room, we start really losing this level, you have to expect that the S&P 500 is going to test 3,000. I think Goldman Sachs is calling for 3,600 by the end of the year, where we basically hit that level. I don't think that's the case, guys. I think that we really start losing things. A 600-point drop in the S&P 500 shouldn't be out of the equation whatsoever. If anything,
that'd be a 20% drop almost.
At least. I mean,
okay.
Think about where we are.
Yeah, that's what I'm trying to get more. I mean, you're very similar to what Oliver there was saying, feeling that, with that in mind, it sort of changed. I mean, it makes me look at my narrative a little bit, not that much different, because if you took 20% off of Bitcoin right now, basically at 20K, you're looking at 16.
Mm-hmm.
I could see that in play. You know what I mean? I do think 17.8 is going to be, real big support for us at crypto, with Bitcoin. So, that's what I'm more looking at. That's what I was wondering. But there is no denying the correlation and how they've moved. So, I can't ignore that part. Where in my mind, and I've heard a lot of talk of people down 13, even at 10. You've asked me about that, and I've pretty much shooed you away, right? And explained my reasons why, for it. And part of that is that, again, what we see happen on drops recently is they come back. What we've seen, if you looked at 2018, the way that we dropped, your sort of second drop, which was the one that we just had recently, tends to be towards your bottom. And that's why I think 17.8 from June, that area is what I'm looking at. But man, yeah, I mean, if that's what you're thinking, I mean, if you're talking that low, down 3,000 to 3,200 on SPY, that puts all that in play for crypto. I'd have to say without a doubt. So, yeah. I mean, just again, I just wanted to sort of feel you out, because that's, people say, I think it's going down direction. I think it's going up directionally, but they don't really, I need to know what those numbers mean.
Right.
Percentage wise for you to put it into percentage wise for me. And do I think that's feasible for my end? Yeah, I do. I do think you could see that for sure. I mean, for me, what I think more is, and going along with what you said, is I think we're going to spend a long time down here, though. You know what I mean? Is I think that we, will we range up to maybe 25 again on Bitcoin? Yes. We'll see relief rallies, during the bear markets. We've talked about that a lot. You see some of the best relief rallies there are, but, you're talking, middle of next year before you really start to get out of that, especially with the recession word being thrown around. I mean, I'm sure you probably saw Stanley Druckenmiller, what came up pretty harsh today.
Very harsh.
He has a good sense in general. Griffin was not far behind from Citadel. I was mentioning in my room today about how crypto, Twitter doesn't spare anybody. I always thought it was just crypto that sort of like got attacked at every, sort of thing. But man, have people gone after the Bank of England, unbelievable. Equity, they're ready to throw anybody under a bus. It's crazy how negative Twitter can turn.
Well, they said that that the Bank of England had to take this stance, otherwise the pension funds were going to go belly up.
Yeah,
it would have been like a Lehman Brothers type of event.
Who's got a British pension who was complaining about that this morning.
But it's the same thing too. It's like, this is the stance they had to take to prevent the Lehman Brothers type of event. Yeah. And, in the grand scheme of things, and that's what I said. A lot of people in my room yesterday were bitching about, printing up all this money. But I said, the Fed and our U.S. government was faced with two situations.
Yeah, tough choices.
Well, they chose the lesser of two evils. Yep. Do we tank the market? It was more like, do we tank our economy and absolutely devastate it in an extremely short period of time? Or do we give people enough time to recognize what the hell is happening, deal with the consequences later on, and then we could kind of try and figure it out and maneuver around it? And, they took the lesser of two evils. The problem is that they allowed the situation to get too far out of control.
Started too late.
Yeah, exactly. They were Evans. I want to quote what Evans had said. Fair game to say Fed should have started raising rates earlier. And this is a fairly dovish gentleman. Fed Evans out of Chicago. He's generally one of the biggest doves out of the voting members, and nothing he's been saying over the last 6 months has been dovish whatsoever. So they realized their mistake, and that's really where this aggressive rate hike is coming into play. But the problem with that is that it's not just causing imbalance for our markets and potentially our economy. It's kind of throwing the world economy. It's having
a death spiral.
Yeah, it's a macro effect. I mean, it's certainly causing devastation in these up and coming countries. Like you hear a lot of stories about Sri Lanka. And Sri Lanka is going crazy, and all these emerging market economies having and facing crazy levels of inflation, 20, 30, 40%. And now we're starting to see the tried and true and the rock solid countries like the United States, like, for example, Russia, obviously the UK, they're facing unprecedented issues. Germany, I mean, on top of rising inflation, now has to deal with obviously energy and the panic that's setting there because winter is coming in every sense of the word. And so I'm curious to see how this is all going to play out. I don't think it's going to be great. I think there's going to be respite relief pops, but it doesn't, seeing 300 by the end of the year wouldn't be a surprise at all. Seeing us even get below the COVID lows, shocking as it may be, people really forget that we hit this level and then basically doubled up and then some from this pricing range. But what people don't understand is that it's not like we're not going to come back. Unless this economy completely collapses and we become number 3, number 4, number 5 in the world, which if that was to ever happen, there'd be a total economic and global collapse. And that QAnon about a new world order, maybe that really comes into play. Maybe that really is happening, but I highly doubt it. I mean, honestly,
Bitcoin would be their currency, so I would be their king. So let's just keep that in mind.
Howard for king, let's go. Let's go.
By no way am I a QAnon or even a right to the right or anything like that.
I mean, look here. Can you do me a favor and share your Bitcoin chart really quick?
Sure.
Do you see that? Like, I know you and I both are saying that they've obviously have had some divergence here, right? We've seen Bitcoin as wild as it has been, especially we were talking earlier. I'm like, why is Bitcoin future selling off? And you're like, oh, it's going to snap back, and it's snapping back now, and sure enough, it did. But for me, it seems pretty distinct that Bitcoin is holding up exceptionally well, while everything else is not.
I mean, I do laugh because, as you know, I've been not battling, but I've been made a few comments that have upset Bitcoin maximalists lately on CoinDesk and other places. and another one that I have is this, number one, their narrative of all of a sudden is how much Bitcoin over the last 6 months now is held up better than all these other fiat currencies. They're very good at taking time frames. And I just had a laugh because I'm like, okay, let's just take it back for a year though and go 12 months and how are we doing? Or how about the fact that anybody that bought Bitcoin in the last 2 years is now underwater, or was as of 2 days ago. Now it's back different.
Right.
But literally every single person that had bought Bitcoin in the last 2 years was underwater. That doesn't mean I don't have the strongest conviction about Bitcoin, but it just shows time frame and time preference and things like that. Investment horizon. How long do you need your money? All matter in. So right here, let's go out on the daily chart a little bit. As you said on the weekly, you can see in the weekly when you really come back, and what I'm talking about is here in 2018, 19, you can see we traded in a level, this level after coming out of, a highs of 20,000.
Yeah.
We came down to 3,000, brought ourselves back up to 14,000, and then came back down, to 6,000. So we're going to see that volatility. And, we're really early in this bear market. I don't think it's going to be a multi-year bear market, but I do think it could easily go 1 year. If you figure it started in June here, June 13th was sort of the week that it all went to hell. So that's one of the things that I'm really watching. And you can sort of see, like you said, Bitcoin has done a little bit better of a job after that June drop of trading almost sideways, right? We've seen some peaks and valleys. It went up, like we said, from 17.8 up to 25 and then came back down there. So a couple of things that I'm looking at, and I brought this up on CoinDesk the other day also, is, we're really looking at accumulation zones of range trading right now. So it looks the best on the 4-hour chart here. But you can see that I've set up and talked about an accumulation zone anytime Bitcoin gets below 18.5. So below 18.5, I'm entering long positions. And actually, that's at 18.250 because this was for something I was doing today.
And by the way, Howard doesn't just talk about it because he said this to me before too. And every time he said this, and every time we've gotten to this range, you've given out some sort of signal that's been bullish, and it's always been really tried and true. Rinse, wash, repeat, right? And I'm with you on this accumulation idea, by the way.
Yeah, I mean, if you go back, if you just pull it back, you can see this. This didn't just work once. It worked back here in September 19th. It worked back here September 21st, and now it worked back here, earlier today. And the same way is on the sell-off. It's not just here. If you take it all the way back, you see that that's been, going all the way back into, September, almost into the end of August. This is where we've been. If you've sold off at the level of 20,250 or so, and you've accumulated back down at 18.5, you've just been able to rinse and repeat. And we did it really well. We bought in, we bought a short back yesterday, when you could just see it overheated after some liquidations in the morning, pushed it up. And we rode that down. We were out of that yesterday in about 30 minutes, as I told you. Yeah. It was like 22% in 20 minutes, I think, was the trade.
You're like, I'm already ready to get.
I'm already out. And then, we got a partial exit, and then we stopped out. We moved our stop up tremendously to protect ourselves into profit. We took that. And then this morning, earlier than I normally put out signals, right around 9:30, we went long today because, again, it had dropped down into that, 18.5, 18.6 zone. As soon as I saw it start to turn, we went into a long that we're still at, right now at 19.578. And, we'll ride that into, we moved our stop loss up again. So we're already guaranteed to close in profit. We're pretty close because we're actually playing the leverage 3 ETF on it. We actually hit our first profit target. So we hit our first profit
indirect
target.
Guys and gals.
So that would have got us a half exit right there. And now we've moved up our stop loss also into profit, just to get ourselves. What I will say is in this volatility, you've got to be willing to take a little bit less of a win than you normally are. I had a student today ask, what are we really looking for? If I can get a 20% win in 20 minutes, then we're out. You know what I mean? I don't have to get much, because we've seen these reversals. I mean,
and it all adds up over time.
I mean, we're trading back to the mean. We keep coming back right to, on Bitcoin, we really keep coming right back down to this 19,100, 19,150 range, pretty much since September 18th. So, last 10 days for sure. That's really been our mean. So, that's how we're trading it. And, like you said, just rinse and repeat. It doesn't have to be very fancy.
No. And again, you like you said, there's no need to be greedy if you're accurately timing your opportunities. These small quote unquote winners, they add up, and next thing you know, you're up a ton of money. And people just don't tend to realize that. They get too greedy in these environments.
Yeah.
I got a good question for you, Howard. What's it going to take for you to be so bullish that your nuts are going to hurt? Like, where do we need to
like I said, we're going to see regulation. We're going to see volume. Two things. We're going to see regulation that clears the way for, institutions to feel much more comfortable coming in, whether that's taxation, along with, more tokens being available. And number two, Mike Novogratz, I listened to something he said today was pretty good, is, in the past, Bitcoin has basically mooned maybe on 80% hype and theory and 20% on utility.
Yeah.
And in this next one, it really got to get closer to 50% hype and 50% utility. And I believe that's really the case. And I think that what goes into utility, though, is also something called game theory. And that's what we see in El Salvador and Congo and Nigeria, countries like you mentioned that are having problems and need to adopt Bitcoin. Yeah. So that provides that adoption also. So that's what we've got to see. And what we are seeing it, though, I mean, Lightning Labs, I was watching today a video with their CEO. They've created the ability to make stable coins, or to basically to transfer stable coins on the Lightning Network now. So you'll be able to, and what you'll start to see is payment platforms really start to take off, because and I've said this, they're going to use Bitcoin as the rails, and you're not going to know you're using Bitcoin. So Charlie, like the perfect example is we're in a fantasy football league. At some point, I'm going to need to send you $100 because I'm definitely not winning this thing. So I would have to send that money. What you'll be able to build now using, or with their new protocol, what you could do is I would send you $100. I would send it in US dollars, whether you wanted to be paid in US dollars or a stable coin, or if you lived in Europe for some reason and you wanted it in euros, you're going to get paid out in your wallet in that denomination, the same way that Square works internationally, right?
Yeah.
The difference is what's going to happen is it's going to take whatever currency I want to pay, it turns that into Bitcoin, it moves that across the Lightning Network, it cashes that out for whatever currency the end user wants, and it does all that without you knowing. So Charlie doesn't need to know that the Lightning Network was used. What he knows is it was free because it's 1,000th of a penny for a transaction. So it's literally a rounding, number. So that's what you're really going to see. And that's when you're going to be, sort of the game changing type things that will come through is now and I think what you're going to see is going to be top driven. So your Walmart, you do how much in credit card sales a year? You pay 2% processing fee for that, and they don't pay 2%, but your average, retail does pay 2%. Now I can do that for 1,000th of a penny per transaction.
It's funny that you bring that up because in Seattle, so I'm familiar with the cannabis industry, of course. It's part of my program, but we're not getting off the ground floor with this administration. But it's funny you bring that up because in Washington in particular, Seattle is where the first time I saw that you were able to use your debit card to purchase cannabis. And the way that they had it worked was that the credit card reader was processing transactions from fiat to Bitcoin. And that was the way to kind of skirt the government, regulations and laws, because obviously there's such a gray area, right? And so they're known as converters. We see them in ATMs, but it was the first time I saw it at an instant credit or instant debit card transaction. And the fees were small. It was only $1 or $2, where most places now, if you go in and use your debit card, will charge you up to $5 to $10. And sometimes it's a percentage of what your purchase is. So it could be even greater. And I said to myself, I'm like, this is the coolest, you know what, ever. I'm like, this is amazing. I'm like, you know what? You don't need to worry about government regulations. And more importantly, I'm like, I wonder if these stores are actually holding the actual currency. And then when it started rising, they decided to cash out.
Most aren't. Most are immediately cashing that out, but still, like you said, it's the fact of just the savings. You know, if you're doing thousands and thousands of transactions, you're in e-commerce. You know, instead of taking credit card, you know, you push people through this system where they're using an app like Square, which allows you to use Lightning Network. So you can already do that through Square, and you're able to do this with a QR code. Happens instantly. You don't have to wait 2 days for your money. You know, like at my restaurant, you know, whatever we sell on credit cards on Friday, we're not going to get paid till Tuesday. So, you know, there's a 5-day wait in restaurants. That's a big deal. Yeah. You know, that doesn't happen in this system. It's, you know, again, it's money in my bank account in a matter of seconds.
So, Howard, not to pivot really quick, but what are your thoughts about Powell's stance? Because Powell spoke several times this week, right? And the first time he spoke was relative. It was at some
digital asset conference. Yeah,
in France, and he was talking directly about cryptocurrencies and what, you know, the Fed stance is and et cetera, et cetera. And he, you know, it sounded like at some point earlier this year that there was an aggressive stance in trying to kind of bring the Fed along into the idea of stable coins and et cetera. But, you know, that kind of died off. And then now his stance was kind of way further on down the road. We still need to do a lot of, you know, research and we need to look into it more. And, you know, that's not number one on their plate right now. The number one on their plate is trying to combat inflation. But what are your thoughts on his comments, his direct comments?
Yeah, I mean, so yeah, a couple of things that he said, and what he basically gave was almost like he almost waved the white flag to me to surrender. And what I mean by that is he said it would not be anonymous. Yeah, well, that's like that is basically a deal breaker when it comes to our Congress. Congress is not going to allow there to be a tracking of a digital currency that could be programmed. So if people social, you know, we're seeing it. I sent you a video, I think, about, you know, what happens in China. If you can't get access to airline tickets right now if your social credit score is under a certain level. And those fears, yeah. Oh yeah. I forget the number. It's a pretty big number too, that has lost the ability to international flights. You know, that, and they, you know, those are the things that you can control with programmable money. So, you know, I think, you know, the way, you know, he made it clear that they would need years to do more research, at an immense cost. And, you know, and privacy current concerns are a big problem, you know, and I think it just goes to what I've talked about. And, you know, Brian Brooks, who was the former person in charge of the OCC, the Office of Controller of Currency that oversees banks, has always said that there will never be a digital dollar, that they will privatize, they'll use a privatized stablecoin like USDC. They'll regulate them very closely. They'll have to follow into regulatory guidelines, similar to how a bank works, and that there'll be 2 or 3 or however many, because you'll see Goldman Sachs and JP Morgan and all these people will enter the fray, sure, of course. But that's what you're going to see. And part of that
makes a lot more sense, though.
Right. And part of that is to be the world's currency. You know, in certain countries, they don't allow you to own much US dollars. So what those people have been doing lately, like we've seen Brazil has been one of the largest adopters of crypto recently, and it's been stable coins. They're getting out of their currency and buying USDC and putting that into their wallets because it bypasses, you know, sort of those rules about owning a certain amount of foreign currency.
Yeah.
So you have that going too.
You know, Howard, it's trying times in the markets, man. This is, you know, I feel bad for people that are trying to learn how to trade stocks and crypto under this kind of, you know, nonstop spew of, you know, chatter, news, talk, and People don't realize the effect of FOMC voting members have on a daily basis.
Yeah.
It's really tiptoeing.
Seven talks today. There was 7 different talks. I posted it. I heard it on CNBC. I almost fell out of my chair. I almost went back to bed. I'm like, why am I even trying?
Exactly.
Any point, any 7 of these could send this in the direction, opposite of what it is.
And I want to make this clear. There's a difference, folks, between buying and forgetting about it, which is what investing is, as opposed to timely trading, which is what I do and what Howard does in his room. Obviously, you accumulate, you talk about the bigger picture as well, right? You zoom out the lens and we see the bigger picture, and you have an understanding, you have a thesis as to why you want to be, kind of investing or accumulating certain projects or certain coins. And I guess it's kind of the same thing with stocks, but what I do is a lot more short term. What you've been doing is short term because of the market conditions as well. And we talk about being swift and being quick. I mean, I got high speed internet. I have all the access to all the information out there, but there's always a degree of latency in comparison to names like the aforementioned Ken Griffin and his firm, right? And other traders out there as well. And again, one timely misstep in this market, it could get very ugly. It's really tiptoeing around like landmines at the DMZ. It's crazy. And, it's not easy, but I'm telling you, folks, I promise you it gets easier. If you can learn under this environment, really and the one thing I am afraid is that the people that do learn are going to have these expectations as the market starts to settle. Well, when our markets settle, it's different, right? Crypto markets settling, sideways, maybe when it's bullish. When crypto is bullish, it's like gas pedal to the floor. It is going. With equities, it's not like that. It is grindy, choppy, up all day, no fear from buyers, no sellers are standing in the way. I mean, it's the same thing. You have a choice in that instance, but neither is going to be a good result. Do you want to stand in front of the tracks when the train's going down, 100 miles an hour or 30 miles an hour? Either way, if you get hit by that train, it's not going to be good for you. And that's why sellers don't step in front of the way when the bulls have total control. A prime example is the low of COVID to the most recent high of January, 2nd of this year. It was just a nonstop grinding run up. And, once we get back to that mode, and we eventually will, folks, you're going to have to adapt in accordance to the market, right? Adapt or die is something I like to say. I guess final thoughts as we start wrapping this up, Howard. When we look into the GDP report tomorrow and the market gets ugly, what are your thoughts? Do you think that that's actually going to be very bearish for crypto, or do you think it's actually going to be a possible booster as maybe people start taking money out of the markets and start shoving into something like Bitcoin? They're like, hey, Bitcoin hasn't hit new 52-week lows. Maybe we should look at Bitcoin.
I mean, I do think you'll see some transfer, sector transfer out of equities right now and into crypto. Because it's been beaten down more, people, feel that there's less downside maybe there. But I think that we'll still keep our correlation in general to especially the NASDAQ and to the NASDAQ 100, for the tech side of it. My thing is just keep your head about you. As you said, it's hard to trade right now in a, bilateral market where we go up, we go down, we go up, we go down. And there's not really that pivot point. As you were saying, in between the drop of COVID back in, that March of that year for the last 18 months, it was a unilateral market. The market was just moving up. We had ebbs and flows and things moved. And there were times when, even the best of the FANG had a bad week, and you could play it there. But it's a lot easier to play when you sort of have a direction, right? If if your feeling is the market's going up, then you're playing based on those dips and the market going up and down based on those dips and ebbs and flows. Right now, the problem is you could wake up tomorrow and something that's trading at 300 is now trading at 250, or it could be trading at 350. And that makes it a little bit more risky. Volatility is a little higher, which is why I don't understand why VIX isn't through the roof. Someone's got to explain that whole ratio to me better.
That's why I was asking the coaches chat about the VIX.
Yeah. I mean, Scott said it's been disassociated from what it's supposed to do, and he would know better than anybody.
I've talked about that too, and it just seems like this is just a historical zone where it gets knocked back. But relatively speaking, the way it was broken down was that the VIX is a parameter for what, like 27 to like 35 days out, I believe he had said.
Yeah, volatility, and it weights closer more. So the fact that while we've been trading depressed, we've been trading in the same depressed area means that there hasn't been as much volatility. So I get all that. It just seems to me like it's not, I guess I always looked at the VIX as almost like it's almost like a SPY put,
it is.
type of
it really
thing.
is.
And that's how I always looked at it. And it really, and I understand now that no, it's actually a volatility versus a downward play, but in volatile times, they tend to go down. You know what I mean? That's exactly what they go up and that's when the VIX takes off. But I think that's, so that's what I like that, your comment. And even when, things are going down. So, if you do feel like what you're saying, and I agree, that we're going to see more pain before we see, the good days again, is be ready to, to open those shorts and to let them sort of flow. And when you see that, so our bias now should be to try to get more profitability to the downside, quite honestly, than to the upside, because those drops down are more likely to happen, like you said, than the moves up. So you got to start playing those percentages, so, when you get those signals and the signal says, like I saw on Bitcoin, it was just slowing down. You could see a Bart Simpson getting ready to form there, the other day. And then today you could see, the W formation on the hourly. So,
and Howard, you brought up an incredible point about the VIX, right? Sorry about that. That's an alert. We see the VIX. I'm sharing my screen right now, and that we bricked. But more importantly, you've been talking a lot about the Dixie, right? U.S. dollar, and UUP is the way that I track the U.S. dollar right now. And if you just look at the chart on the right, we haven't had spillage like that in quite some time. I mean, we're going back to like, September 7th, when that took place. And I mean, we are now in September 28th. It's been that long since we've seen that kind of spill out. So usually there's follow through in that instance, and we'll probably pop along. But this is like the first final respite that we've seen out of the US dollar, where we could actually see us leak down a little bit lower. So traders, the disconnect with the VIX has been pretty evident, and we did reject, but a good gauge of how to read the market activity from a shorter term perspective should be utilized right now with using the UUP. We see UUP making a big leg up. We should expect the markets to go down. It seems like a lot of the downside has been driven relative to the rise in the US dollar, and then of course the rise in yields and bonds, right? Something I mentioned earlier today, it's the first time that we saw the 10-year and the 30-year inverse since 2008 today. And so with these yields starting to get to these crazy hyperbolic ranges that we haven't seen in decades, this also leads to a point where maybe we could start actually seeing some bond buying soon. The only thing I'm concerned about that is that once bonds start catching a bid, one of the things that we haven't talked about in quite some time is that the Fed unwinding the balance sheet. If you notice, they haven't mentioned that in the last two FOMC meetings, and that's because they haven't been unwinding. They haven't been unwinding because the bonds don't have a bid. Nobody wants to buy these bonds. It's a losing bet. Why the hell would you buy something that's going to return 3.5% when inflation is at 5%? It means you're going to lose 1.5% in this situation. It's a guaranteed loss. So that's why the bond market has been cratering because of inflation. And that's really where the coinciding effect is, right? if the bonds keep going down, aka yields keep rising, and there's nobody to buy the bonds, well, that's a problem. That's negative for the markets. The US dollar gaining strength isn't really helping in that effect. And more importantly, I just said the magic word. The Fed hasn't unwinded yet. So even if we see these bonds catch a bid, the Fed is going to be dumping at least $40 billion worth of bonds on the market, along with mortgage-backed securities. So this is where like the Fed is in a difficult situation, and their backs are in the corner, and there's no sign of respite. They're just kind of in this, I don't want to say panic mode, but it's something we got to do now. And then all the other things are going to come into play. And where does that leave the markets? It leaves the markets uncertain. And now the markets is only going to really just read on the one data point that's going to be consistent for them. And that's what the bond market is doing. That's what the US dollar is doing. And that's having a huge effect on pricing action in the markets and relative trading in the markets. And that's where we're kind of like, I don't know. Everybody's just throwing their hands up. It's like, I don't know. And the market is showing that indecision. And so, kind of to leave it off, guys, continue to watch UUP. We got to watch where, if bonds really do catch a bid. And that's kind of why I really was interested in now seeing Bitcoin as being viewed as a relative relief asset, as well as obviously the fundamental reasons why you want to be long Bitcoin. But you remember, that relationship used to be with gold. Well, we're beyond the time of, reigning dictatorships and pirates. It's a digital world. Why not focus on the digital gold asset, which is technically Bitcoin, right? It's the digital currency. It's the primary digital currency. It's the, I don't know what you would say. It's the end all be all, really. As Bitcoin goes, everything else goes.
Invention of the 20th century.
Yeah. I mean, we'll just have to wait and see.
It is. I mean, it's, since the Medicis discovered two-way ledgers, which revolutionized accounting. What Bitcoin does is it takes ledgers for the first big increase that you've ever seen since then.
So, any parting words before we call it a day, Howard?
Both our football teams are terrible. And besides that, everybody have a fantastic day. Please, if you want to see some more content like this, share it with your friends. Tell them about that. Put it on social media. We really, really appreciate any help you give us, helping to grow this, viewership. And please, if there's any coins you want us to look at, any stocks you want us to go over, any sectors, let us know. We definitely are willing to do that. We love it when we get feedback and asked to look at certain things. And what we got to do one of these days, we got to do one of these as a live stream there, Charlie.
Yeah.
And actually ask questions live. So everybody have a fantastic week. For myself, Hondo, for Charlie, the disciple of trend, the legend himself. Thank you for joining us. Have a great week, everybody.
Just so you know, Howard, I'm facing Scott this week, and I'm going to be golfing with him this Saturday. So if I don't show up for work Monday, you know what happened.
Yeah, they took you out, huh? You go to the club?
Yeah, of course. He's not going to.
Nice.
I asked if he wanted to go to pub. I was willing to take him out. He said absolutely not. So I'm playing with him, Alex, and big old Jake. So we'll see how the Bauer boys do.
I saw Brett on Saturday, actually. So we've been hanging out with all the Bauers. Look at that. Good stuff.
Peace and love, everybody.
See you later on, guys.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC PTA makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.